Hello, Deferred comp savers. In today's website walkthrough, I'm going to demonstrate how to use the RetiremenTrack calculator, which was specifically designed for state of Missouri employees. It takes into consideration all of your data, as well as your defined benefit pension, Social Security, and outside savings accounts. The results will show you if you saved enough money throughout your career or if you're going to have a shortfall in retirement, meaning you may not have enough money. So to find RetiremenTrack, let's go to www.modefercomp.org. Hover over the Planning and Tools section and click RetiremenTrack. On this page, you're going to scroll down just a little bit and click the Let's Look at My Retirement button. Now, RetiremenTrack is broken down into 5 short sections, the first being all about you. So our example person, we'll call her Tammy, is 43 years old, expects to retire at age 60 and hopes to live until age 95. She's married, makes $36,000 each year, and gets paid semi-monthly, or twice a month. We'll leave the expected annual salary increases and assumed inflation rate the same as the default numbers. Once we're finished, we'll click the Next Section button and move to the Retirement Plan Savings and Income Replacement portion of the calculator. Here, we will enter Tammy's deferred comp savings balance, which is $5,000, and a 90% pre-retirement income replacement rate. The income replacement rate is the percentage of your current paycheck you want to replace in retirement with your defined benefit pension, Social Security, and personal savings, all in order to cover your financial demands in retirement. For a reference, many state of Missouri employees need at least an 85% income replacement to make ends meet, but you may need more depending on your lifestyle and financial situation in retirement. In this example, we will leave the expected rate of return on all personal retirement savings at the default numbers. In the next section, 457 Deferred Compensation Plan Contributions, you will enter in your savings and tax rates. In our example, Tammy is currently contributing 1% with an auto increase of 0.2% to both her pre-tax and Roth savings accounts. She is currently in the 12% federal and 4% state tax brackets and hopes to stay at those rates in retirement. Lastly, Tammy's employer does not currently match her contributions, but if that changes in the future, she can input that data in this section. Moving on to the My Pension and Social Security piece of RetiremenTrack, you can choose to not have your pension and Social Security taken into consideration, let the calculator compute it for you, or enter in your own estimates you may have received from Mosher's or Empers and SSA.gov. Tammy chooses Yes, calculate my benefit, and enters in her anticipated Social Security start date of age 62. She also selects Yes, select a retirement plan, and chooses her specific defined benefit pension plan. She's worked for the state for 5 years and hopes there will be a cost of living adjustment of at least 1% in retirement. If all the data is correct, we'll click Next Section and move on to the Other Retirement Accounts and Income piece of the tool. In this section, you will have the ability to enter in other outside retirement accounts or possible working income in retirement. So for our example, Tammy does not have any outside accounts because she has already rolled them into her Deferred comp plan, but she does have a rental property and expects to receive $500 per month from it throughout her retirement. After we hit Show Results, the calculator will create a neat little chart depicting your financial situation in retirement. By hovering the colored bars, you can see an estimated amount of money you'll receive annually from each retirement income source, as well as if there's an income gap. In this example, Tammy can reach her 90% income replacement goal up until the age of 75. At 75, you will see red bars, and red means there's a gap or not enough money. Here's where the planning piece of RetiremenTrack comes in handy. By adjusting the sliders below the graph, you can determine how much you need to save each pay period to make ends meet in retirement, or if you simply need to push your retirement date back. In this case, if Tammy increases her pre-tax and Roth savings, she can reach her goals. So let's try 3% with a 0.2 annual auto increase for both her pre-tax and Roth. No, that doesn't quite get us there, but if she increases her contributions to 3% with a 0.4% annual auto increase, she can reach her 90% income replacement goal in retirement up to her anticipated life expectancy age. Now, if Tammy decides she would like to replace 100% of her income in retirement, she could create a plan of attack by adjusting the pre-retirement income replacement goal amount to 100% and then tweaking the other sliders. Hopefully this calculator will tell you you're on track to reach your retirement goals, but if you're not and you need to increase your contributions, you can do that by logging into Account Access via modefercomp.org or through the ESS portal and increasing your savings contributions. This concludes the RetiremenTrack walkthrough. Be sure to check out more tutorials and educational videos on our website. Until next time, keep on saving.